9 o'clock a.m. Eastern Time on the 25th. Everyone's brackets busted. Might as well start trading now, huh? All right, nice to see everybody. Let's get started. If you're out there typing a wire, yes, everything's coming through loud and clear. I am live right now. All right, cool. William, hola, what's happening? Sterling, how are you? Chris, good morning. Todd, good morning. All right, nice to see everybody. Jawan, Gary, in the house. All right, here we go. Let's get into the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. All right, we'll get into the charts. This is the heat map from yesterday. We've really seen a broad market recovery post FOMC. We know that last Wednesday, Fed rate hike, 25 basis points. The market's been pretty responsive. We're going to take a look at the chart and see that we're pretty close to that 6.9% rally, which is that 12% or that 12-month benchmark post rate hike cycle. We're pretty darn close to it. We've got a pre-market that's up today. Futures pointed up. This is a one-day performance of the overall market, heat map. I went to the 5-day, or the 1 week rather, and it's interestingly mixed. I expected to see more green across the board, but I want you to notice that it's still a FANG-oriented market. Lots of flows into Apple, Microsoft, Google, Amazon, even Tesla. Tesla's having a big run there for 16 to 20%. Not too shabby if anybody bought the dips on Tesla around 800 bucks. I think it dipped a little bit lower than that actually not too long ago. But still, I was surprised to see so much red. We have been pretty much killing it in equities on demands, and I'm happy with that. We've got some stocks that are running really, really well. Case in point, here's our pre-market 451.68. It's up about $1.20 on the SPY. Pre-market on the DIA is up about 80 cents. Pre-market on the Qs, leading this broader tech recovery, it is up around $1 on the Qs. I set some chart alarms at these recent highs, and our volatility index has been getting squashed. So what is working out nicely is broad market recovery. Long SVXY, that is back up. It's up to 54.15. I've got some calls at 55. If the stock price continues to rally to the upside, I will be rolling those calls up for additional profits. Some of our best running stocks for the last couple of weeks. This one, Cleveland Cliffs, a steel maker out of the U.S. We broke through these highs at 26 and have not looked back. We're at 32.67 from the close yesterday. A little bit softer, but I still have some areas around. I'm pretty bullish on the stock even to like $40, $41. And if we get up there, I'm going to roll my calls because I do have a $30 call that is out to May 20th. So I have some time in this one still. But if the stock price goes up on its own, I'm going to roll up my calls and grab a few more bucks on that profit by expiration. X is another one. United States Steel. We've been in this stock for probably the last 6+ months, on and off in the low 20s. We bought some more here on the dip around $19, and this thing is now up to $38 with a pre-market that's slightly softer. Again, pretty bullish on the stock. We're still buying dips and going after $45 to $46 for a overall stock price for right now. And I still think there's room to go higher, but I like buying any dips on X and CLF. So they've been working out really nicely. Here is the spreadsheet for equities on demand this week. We'll review this in class at the top of the hour. Let me go to my 325s. 325, we have a credit spread on United States Steel. That will be full profit today. We have a credit spread on CLF. That will be full profit today. FXI, the 31 by 30, that should be full profit today. FXI trading at 31.92. We have the 31 by 30 according to this. So again, as long as we stay above $30 or $31 rather, we'll make our full credit there. And that will do it for our credit spread expirations. We have a lot of covered calls that we'll be talking about in class. I could potentially be losing stock this week for profit in Campbell Soup. That's CPB. If it's above $43, which it is. So if I lose it this week, big deal. CTRA. 2703, we've got a $28 covered call out to 414. That's a monthly expiration for April. And SLB, we have a $46 call, and we turn around and own this thing in the low 30s, like $39, and we're going to flip this for maybe $5 to $6 a share. So all in all, things are looking pretty darn good. All right, on the currency side, things are a little interesting. We had a lot of discussion this week in Flex on the Japanese yen. Let's go to the currency strength chart and see what's kicking today. So yesterday, let me refresh this really quickly. All right, so yesterday to today, well, that's certainly more encouraging as far as anyone holding short Japanese yen, because Japanese yen yesterday was getting smoked, and today a little bit better. Japanese yen and Swiss, part of the stronger starts of the day. We actually had quite a bit of volatility early on. Let me change the color. Early on, that is around midnight, 1 o'clock Eastern time, and again around 5 a.m. We had some peaks and strength around the Japanese yen. The Swiss was pretty steady. Again, stronger on the morning. JPY stronger as well. Everything else is pretty stuck together. So we don't have a lot of breakouts, but I'm curious to see, as JPY, continue its descent, or are we going to actually start seeing some tops? Discuss it very much in detail this week in Flex. Fifth wave moves, hopefully coming to an end. Fifth wave moves, hopefully leading us to an ABC correction. Those ABC corrections should allow us to be, basically short Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, Dollar yen, and seeing some nice profits here in the next couple of months. Might take that much time. We might have this big, right now this might just be this broad Q1 rally, and we might see some tops or bottoms in the next week. We're going into next week's trading. We still have all of next week through Thursday for the end of the month, end of the quarter. We could have some volatility around those levels. We could have some highs and lows forming as well. And that's what we're going to continue to monitor and continue to trade. So as far as the currencies go, we have been watching the dollar index and noticing that not much is happening. So the big movers and the breakouts have been in the yen crosses, and it's been all post FOMC. And the correlation that I've found is the Nikkei 225. Okay, so a little bit of a pause today in the Nikkei 225, which I do think will continue to find resistance. So we have this high, lower high, lower high, lower high. Now I know that the structure recently, the last 2 weeks, has had this huge recovery. Okay, but we have a gap. We have a gap. We have a gap. We have had so many candles in a row that have been bullish. I think this move gets faded back down at least a little bit to help kind of right the ship on some of these crazy breakouts and blowouts in the Japanese yen, where we've seen 7, 8, 9 candles in a row that have all gone essentially straight up. So, all right. Morning, Donna. Morning, Linda. Nice to see you. Morning, Joe. Okay, so Nikkei 225 is what we're watching. If you see this instrument right here going higher, you're probably going to see a weaker Japanese yen. You see this instrument start to go down, you're going to start to see the Japanese yen get stronger. All right? Positions that I'm looking to protect this week. Aussie Canadian dollar. I think today is a good enough day. I know that it's not quite at the highs that we took profit at before, but we've been in and out of this trade. I built up a pretty hefty position on the Aussie CAD with equal lows and a trend line break. We added some positions in here, took it up to our yearly pivot, and we grabbed some profit. We did buy a dip around 92.95. That's currently up around 130 pips, 125 pips or so. I think taking profit on that today is fine. I know that it could go a little bit higher, but you know what? It's Friday. I want to grab the pips, and that'll just add to our bottom line in this Aussie CAD. So I'm fine closing Aussie CAD for profit. I'm going to go ahead and mark that on the Flex chart. Aussie CAD. Go ahead and close and protect. And it should be 125 or better on that trade. Okay. All right, so that one is done. Aussie Swiss, we're going to look to see if we have a pullback at all. We've been long in Aussie Swiss. We took some profit at this previous high around 6900, 6930. We've gotten up a little bit higher than that. What I'm curious on now is if we are going to see, because we recently broke this structure high, if this is actually going to offer a bit of a pullback on the Aussie Swiss and then proceed to go back up to 7200. I'm looking for this to potentially be a crown pattern. So left shoulder, or left tip rather, center tip, and then we're going to form some type of right tip in this area between like 68 and 6600, and then look and see if we can get a swing up to 72. If we don't have much of a pullback, I'm probably not chasing this. If this just keeps sliding up, then I will sell it off of that resistance around 72. But if we have a pullback, I'm interested in buying those dips and taking that swing up to 72. So we'll continue to plan that one out over the next couple of weeks. We'll see what price does. Yen pairs. Probably a painful point for a lot of traders over the last couple of days. We've seen, like I said, 8 candles in a row. I'm still not even saying like this is the top. It's like, I don't know. It's not. We might be pushing on the Japanese yen all the way to the end of the month and the end of the quarter, which is next Thursday. So don't think you can call the top, especially on a pair like this that runs, and it runs irrationally. And we've looked at it from daily time frames, weekly time frames, 1-hour charts, 4-hour charts. Look, I'm short on some of these yen crosses. I'm upside down to some of these yen crosses. Doesn't mean that I freak out. Doesn't mean that I close positions for massive losses. It means that I just wait. I just wait. I assess. I look at the higher time frames. And other than the euro yen, which is up to the previous highs, all of these are looking at these really solid 5-wave moves. And that next stage, or the next phase, should offer a 1, 2, 3-wave correction. That's what we should be getting. Now, the timing of that could be interesting. Maybe it's April to May. Maybe we have to. I mean, I don't wanna wait until May to see this, Japanese yen still go hard for another month, month and a half, and then finally see it pull back. Ugh, I don't want to see that. So hopefully we start to see some, Q1 profit taking, Q1 highs, tops and bottoms forming in March, and we'll see what we get over the course of next week and into April. Okay. Screen looks foggy. Just check your resolution settings in YouTube. I should be streaming at like 1080. So if you go, there's a settings wheel on YouTube. If you click on that, there's a quality. You can up the quality to like 720 or 1080. If it's coming in auto, it might just be based on your internet connection, which could be like a low resolution. But I'm streaming as high as I can, like 1080 HP, HD, whatever. So just change the settings on YouTube. That should be fine. Do you ever just trade the US 30? No, I don't just trade anything. I'm obviously trading a lot of stuff. So I look at the US 30. The US 30's performed pretty well. It's a value play, right? So, it looks a lot like your S&P. It looks a lot like your DIA. It's the same thing. If you look at some of these Vanguard funds, VTI, VOO, a lot of these look the exact same. And so to me, look at this is pretty clear on the daily time frame. This is the VTI. This is the total stock market ETF from Vanguard. This has like 3,000 or 4,000 stocks in it. And for a long time, this is like, if you ever want to be diversified, just buy the VTI. Well, that's great. It works when the broad market's going up, and for the most part, it should be diversified where it doesn't have as bad of a pullback. But if you look at this from the high to low, we're probably down about the same amount. And there's just a lot of correlations with this high concentration. So this was still a 15% correction in the VTI, and we had about a 16% correction in the SPY. So a lot of these instruments that are based in concentration, that's why I went back to that heat map for a second. Your FANG stocks are so heavy with, nearly $1 trillion or $1 trillion plus in market cap. That's where a lot of money is flowing right now still. And yes, there's a shift and there's a deleverage and they're getting out of tech and there's a short-term tech recovery, and that's great. We made some good money in tech the last couple of weeks, but I still think the broader market is looking at a value-driven play. I'm still more value-oriented and I'm more energy commodity-oriented right now. I think if I'm looking to make money consistently this year, I've got to focus on energy and commodities. And it might be to the chagrin of the overall stock market because, an energy crisis could be the biggest move while the market tries to keep it together. We had a discussion this week, and I think the Equities on Demand trading room, somebody was asking about, what the heck? I can't remember the actual question. But my response is like, I think the market is like walking a tightrope with no net. I think that we're on the verge of something terrible happening, but we're still keeping, the eyes on the prize, and we're still marching forward. And we haven't really been derailed yet. So, there's still 2 feet on the rope. We're still walking. We're still looking forward. And this market's recovered post FOMC. And I don't know if it's the real deal. I don't know if it's a desperation act to like just get a relief rally post FOMC because the worst of it was priced in. Now the market can move on because I know what the rate hike's going to look like for the Fed for the next 6 months. The market can do amazing things. It can do irrational things. But I also think that we're, on that brink of like, this whole thing could be imploding. But at the same time, that's not good for me. I need to trade it. So if it's going down, I need to trade it. If it's going up, I need to trade it. If it's going nowhere, I need to trade it. So what we are dealing with is a lot of volatility, and we just have to make good decisions. Okay. All right. Sounds good. Okay. Anything else? We can look at some more currencies. Like I said, this week in Flex, if you take a look at any recording from this week, you're going to see pretty straightforward. Look, check a recording out in Flex this week and look at how we analyze the yen. Yesterday's class, especially, we talked about the fifth wave, where we plan on those levels coming back to. If we can turn our break even or better, into profit by the time we get those three wave corrections, or if we're in a good position, we can stand to make a lot of money when these instruments finally top out. So hopefully that's the play. And how does that translate? Well, if we have risk-off trading and the Japanese yen gets stronger, we're going to see a dip in the stock market, which goes back to my original narrative. Coming back to the first chart, I mean, this was our 6.9% rate hike 12 months after, okay, this is supposed to be the average over 50 years. 12 months after the rate hike campaign begins, the market usually finds this 6.9% performance. That is right here, okay? So 12/16/2015 was the last campaign of the Fed. We just started again on 3/16/2022. So we have nearly hit it. Now that means 12 months. I mean, literally from March 16th this month to next March 16th, is the market up 6.9%? If it is, then it fits along the lines of this historical probability. 24 months, the market's showing 19.3%. And from there, I mean, for us to be up, this is 19.3% post rate hike cycle. And from there, I mean, I don't know if we get there in a straight line and then give it all back, or if we go up to this level first, find this, recovery area. We have this crown formation like so, and we form resistance and we fall back down to a fresh low. Then we work our way back and we still struggle to break the highs. This is what I'm prepared for. I'm prepared for the market. If it's going to come up and retest these highs, fantastic, awesome work, broad market, yippee skippy. Everyone's portfolio in 401k should be singing, but I'm also prepared to short the market from there. Okay. I don't think that the environment is better necessarily to get back to these highs and justify new highs. So if we revisit these highs, I'm looking at this stock market right now like 2015 to 2016. I think that we have, at the very best, probably sideways movement, because there's going to have to be this. I mean, there are like major winners and major losers in the market. Right now, we know that if we get up to these highs, that's great for the broad market recovery. But the reality is some of these tech stocks are still getting beat up from a stock price perspective, and anything they do for R&D and growth is getting crushed because their borrowing costs are that much higher. And so, the market could fool us with mergers and acquisitions. The market can fool us with buybacks. The market can fool us with splits with all these cash-friendly companies or cash-wealthy companies, and we can start to see this additional shrinkage and concentration in the overall markets. Again, higher concentration can look like a good thing, but it just makes it more and more fragile if that high concentration begins to fail. Example, at some point, if the FANG stocks are starting to get hurt, the broad market is going to go with it. And we saw that happen in September last year. We saw that happen in November of last year, and rolling into 2022. These stocks all dipped 7 to 10%. So did the index. Okay, so they're very much responsible for what the broad market does. Make sense? All right. If you have any requests out there, if you want to look at some cryptos, let me know. You want to look at some stocks or Forex, let me know. Class today for Equities on Demand at the top of the hour should be pretty short and sweet. We're just going to review some of our positions. Are we losing stocks today? And we added a couple other trades this week. We added quite a few, actually. We staggered out some credit spreads. We might be losing Intel this week. I might be losing Intel this week. Hey, 51.62 close in Intel. Pre-market's 50.93. I've got a $50 call for today that I might lose it. And I don't think I can roll it necessarily. If I do, I might have to go out the next week, but I still want to lose the stock and repair it. I don't know. I'm just going to set a chart alarm here at the high and see what we do. So that was the close from yesterday. Pre-market, we're down. I'm going to see if I can get back to this high. I may roll this. 51.62. If I could roll it up to maybe 50.50 and not have to pay for it, maybe 51 out to next week, maybe not pay for it. We'll talk about that in class at 10 o'clock. But otherwise, if I do nothing, then I'm going to lose Intel at 50 bucks. My break even is like 47, so I'll flip it for a nice $3 a share. Let's see here, Pfizer 52.66. I don't think we have a credit spread on Pfizer for this week. I think it's out to April 1st, but this is another one that I'm pretty bullish on overall. We're going to have earnings coming up in April. Hopefully this is enough to push this thing above 60 bucks, and this would be a nice little flip for like $10 on Pfizer. Let's see here. Chewy. I might lose Chewy this week. Chewy's trading at 45.90. I have a $45 call. My break even's 40.87, so I could turn this into a $4.13 win if I lose it. That'd be next Friday's expiration. But I'll evaluate to see maybe I close it. I'm not going to close it today. If I lose it, I lose it next week. All right. We've had some good recoveries. Crypto, for the most part, has been up. Bitcoin's up to 44,870. I've been talking for the last month plus. Are we going to break these highs or lows? Right? So, yeah, Daniel says crypto seems to be breaking out cup and handles. Very possible. Okay. And it might be a slightly different pattern. I mean, this might be a left tip, center tip right here. And this is our right tip. Now it's a deep right tip. So I'm going to project right now, just to be conservative, there's a couple things I'm looking at. This is either a symmetry move from this low to high and this higher low to higher high. We have a symmetry move that could get this started. And then you connect the highs. I could see that happening right there. Right, where we have connect the highs, we come up here, we do break these highs around 46,000, but we possibly face some resistance up here, this pivot cluster around 48,000. So if this is back up to 48 and then back down to the lows, I feel a lot more confident that that is the structure we are dealing with right now in crypto. Okay, the other side of this could be more of a double bottom, which is this is our low, this is our center high, and the market from this low to this low, if it breaks that level, which is around 46,000. If we break this area and we stay bullish, I have that projected move up here for a double bottom target at 58,357. Again, I'm waiting to see if these chart alarms get activated. If we could break above 46,000, that's good. You know, obviously some movement that we've been waiting for is good. But we also could come right back up to the highs, and we could reject, and we can come right back down. And we'll just deal with either sideways consolidation or maybe it's a channel. Okay, so we'll continue to assess. But the good thing is the last couple of weeks, this has at least been postured to be more bullish than bearish. So I'm sure it's encouraging to see some traders that have been buying in the low 40s or buying in the high 30s and seeing some nice returns flowing in. Ethereum's had a pretty good week as well. I am still looking to see if this chart alarm at 32.88 breaks, and we'll see where this one goes. Again, similar pattern. Is it a head and shoulders, left shoulder, head to neckline, right shoulder? If it breaks this high, I'm still looking for either a symmetry move and then a 5-wave move to the upside where we take and project that symmetry. That would be something along these lines, or we have a potential crown pattern. Actually, well, we looked at this one as, let me use a straight line. We looked at this either as a wedge or a head and shoulders. So wedge right here, that is showing signs of breaking out to the upside. So if we break and we retest and we go, we can project that move up. I'm going to look at symmetry here for a second. And I'll use this box, start from the low, go to the high. All right, so if we hit symmetry at this higher low, Ethereum has a target of around 3406. I'm going to take that same symmetry from a break of this level, from a break of this neckline, and then project this out right here. So if we break this neckline, I would project Ethereum back up into a monthly pivot or higher, right around 4151. So I'll set that as a potential head and shoulders target, and I'll make that green. So that would be bullish head and shoulders projection. Okay. So a couple of ways to monitor and watch and see where we're going. And it's not that far off. I mean, if we hit this bullish projection, that's great. I would still be absolutely looking to see, is this momentum enough to break these highs as well? Because in the bigger picture, the structure we've been watching was connect the highs, connect the lows, and we're just building support. We have support here. We have support here. Are we building support to justify go, to the highs? 5,000, 5,250. That'd be pretty exciting. Okay, yep, we'll take a look at some of those altcoins for you. Sure. Let's look at some other ones. So Litecoin, we're looking at a falling wedge breaking out to the north. It is on the cusp. I talked about this week. I think we discussed it on Monday. If I had position one now around 125, position two at a recent low, if we come back down into this area, and I'm looking at, my projected yearly pivot around 220. At the very least, we come back up to the start. It's not a very good straight line. We come back to the start of this high, which is around 160 to 170. So there's still some nice upward targets on Litecoin. I'm looking to see, do we end up breaking some of these structures to get above this falling wedge? This falling wedge, if we break, retest, go, look for the open space to trade it back up to 170. There's momentum up here and an awesome pivot cluster. We have a yearly, a monthly, and a weekly, all together around 220. So I think that's, again, a safe target to go after as far as profits. And then we have our highs at $300 here. And we also have the highs back around $400 with the peak in 2020. Is that right? That peak was May of 21 with all the other ones. So that peak was around 414 on Litecoin. So anyway, but I think Litecoin has a pretty promising outlook. Solana, same thing. Starting to break this trend line. Also looking like we're breaking this falling wedge. Something like this. Something like that. So if we're breaking that trend line, this falling wedge is starting to confirm that the bulls are in control. That's a good thing, right? Where would I trade it? Well, past support back here around 130, yearly pivot around 145, pockets pivot clusters around 184. Again, that doesn't have to break out highs, right? We just get into some open space. We trade back maybe 50% of this high to low swing, and we have some profit potential from like $100 to 180. Cardano, very similar, breaking a trend line. This is good. Do we end up getting a kind of broader, break, retest, and go? I mean, nobody's going to be complaining. I don't. I mean, for anybody that I know that's trading crypto, most people are longer term bullish on crypto. I don't know anybody that is enthusiastic about the future of cryptos that is like, I'm shorting Bitcoin to zero. I don't know anybody that's doing that. So for right now, it's like this does play out with that kind of asymmetrical narrative of, I think everybody wants cryptos to go up for the most part. Every investor wants to go up. Any exposure you're putting in crypto, you want it to go up. The growth potential is, unmatched by pretty much everything. Okay. So anyway, we're looking at some good confirmation here, finally starting to get some life, and we'll see if we get, Cardano into some open space. Yearly pivot, monthly pivot cluster around 1.81. That still has some legs to the upside. That is another 56% to the upside. One trade, if you're not in the actual crypto, this is one instrument that I am in. I just buy the shares of this. It is Grayscale Bitcoin Trust. It is treated like an ETF. It's not technically a spot ETF. There's still a discount on it. I mean, you can see here that GBTC is trading at 30.51, pre-market's 31.04, and Bitcoin's trading at 44,000. So if you do the math on that, Bitcoin is trading at 44,000 and this is trading at $31. Okay, so it's, roughly a 1/1000th of a Bitcoin, but you can see that it's trading at even like a 20% discount, even further than that. Because if it was truly 1/1000th, then we'd be trading at, $44. So I've got SPY at new post FOMC highs. I've got Intel at 5162. Okie dokie. I'm going to get logged into my broker platform here. I might look at a roll really quickly on Intel and see if I can either keep it today, maybe roll it out to next week, but I'm already in at $50. So I know I've got some profits to line up on Intel, but I'm going to see if I can roll this. So let me move this stuff over here, get logged in, and we'll look at some additional cryptos too. All right. So while that logs in, let's look at the old Doji coin. Let's look at some of these meme stocks, right? Let's look at Doge. Let's look at Shiba Inu, and let's look at GMC or GM, yeah, GME, GameStop, and AMC. They've actually had some pretty good runs this week. Okay, so Doge is trading at 13.6, 0.136. From a technical standpoint, I mean, I wouldn't be in a massive rush to flood into Dogecoin. I would hope that we put in a bottom for anybody that is holding it. I think this area looks pretty promising right in here. Not news, features, and education. I don't need that pop-up. Get off my screen. CVC, I can take a look at that, Donna. Hang on a second. Come on. All right, so there it is. All right, so we'll come back to this in a second. I want to look at Intel before we go. I was going to talk about these lows right here. So those lows and this recent kind of trend line breakout area. So what I'm seeing on a lot of these cryptos are falling wedges. And falling wedges are great patterns because typically when they break to the upside, these falling wedges give us really nice and very quick profit potential. So you look at where this whole thing started. If it started right back here at these highs, I would say that Doge does look pretty appealing towards 30 cents to 35 cents. That's about as much credit as I'll give it right now. If we hold these lows, that Doge looks up like everything else. Now, from a percentage standpoint, that's a pretty good return. If we were to say, okay, I'll get some Doge and take it up to this, previous high, that's 109% just to get back to where this falling wedge started. If we find the yearly pivot, that gets us up to about 146%. Pretty nice return. So a lot of trend lines are breaking now. I think that's giving the kind of permissions to clear the area to get some momentum behind them. Let's go to total market cap really quickly to see if it's up above 1.9. It's 1.99. Wow, we nearly put on, holy shnikes, $100 billion in market cap over this week. I mean, we looked at this, I think on Monday when I looked at this, it was like 1.88, 1.89. We cracked 1.91 when I looked at it yesterday. Now we're nearly at $2 trillion. So there's been some pretty heavy flows in crypto this week. Good. Okay, let's look at Shiba. Potential. I mean, I don't see the same type of structure. I don't see a falling wedge. In this instance, I see that we've broken this trend line here. Okay, so we broke this trend line, and I think we're putting in again. If we're putting in like a broader low in a lot of cryptos here, this could be the structure that I look at. So we could have a left tip, center tip. This could be a right tip that's forming. And as we project this move back up, that to me looks like Shiba could run up to this yearly pivot, which is around, I mean, I don't know how many decimals it is, 0.000. So quadruple 042. Okay, now from current price to the yearly pivot, that is around a 61% gain. Now we could come back to where this whole thing started again, around 100% gain. But I'd be pretty happy with Shiba for a 60% gain if I can get it. That's what I see technically. Like I said, I don't see the same structure. I see a little crown pattern on the right side of the trend line. But if we hold these levels, they look pretty promising. But truthfully, I like Solana. I like Litecoin. I think those are, I mean, they're a little bit more established coins. They've been around longer. And I don't know. I'd rather trade those. But that's what I see. Okay, and then CVC. What's this one? Not DVC. CVC. CVC USD. Trading at 31.6. Let's see. I don't have a ton of history to go on this one. What do you see on this one, Donna? What is it? What does CVC do? Anything? If I go to Coin Market Cap, what's the story with CVC? So search. So this is Covey Coin. What's it called? You can almost just look at the Bitcoin chart to trade these altcoins. It's true. Yeah, I mean, look, a lot of the coins, if you get a broad recovery with Bitcoin and Ethereum, essentially everything's been going up. I mean, that's about 40%, or I'm sorry, it's about 60% of the total market cap is in Ethereum and Bitcoin. Bitcoin is around 40% and Ethereum is around 20%. So if those are performing pretty well, generally everything is going along with it. But there are times where those altcoins will outperform. And a lot of that is when Bitcoin has had a nice run and everything is kind of, let's say Bitcoin had a nice run, okay? But not every altcoin is going with it. Well, once Bitcoin kind of pauses, a lot of, profits perhaps in Bitcoin will then start translating and transferring into other coins. And vice versa. Altcoins have this nice performance and Bitcoin, Ethereum don't really move a lot. That profit gets put back into, Bitcoin and Ethereum. Civic off Ethereum platform. Civic. Okay, so it's this one here. All right, I just want to read more about it. So Civic. So we go back to 2017. We had highs around $1.36. So is this based on a stable coin? Blockchain-based identity management solution that gives individuals, businesses the tools they need to control, protect their personal identity information. All right. Identity verification. So it's like a privacy-based play. Yeah, I mean, I'll do some more research on it, I guess. Users can earn CVC tokens after completing a variety of tasks, signing up for service in the platform, including new users, while validating. Validators can earn CVCs. Okay, so launched in 2018, following a sellout initial coin. Gotcha. All right. So I'll just look at the chart here. I mean, from the data that I show, and maybe there's more to it. Let me see if I can get a better price feed here. CVC USD. If I can go to like a Bittrex, maybe it has the data back to 2018. There we go. Something like this. That's better. So sure. I mean, it's low enough that if I was, just trading it, I mean, I wouldn't mind having some exposure in this area. And level 2 would be support that we just saw around 20 cents. Level 3 would be back down to these crazy lows just off of 0. But upside potential, I'd be looking at this high recently, and these historical highs, and project that okay, can we get to $1? That's a 3x return. Can we get to $1.60? That's a 5x return. Okay. So anyway, I mean it's just like a lot of other things. I mean if it is a calculated risk, there's the trade. I like that we have some history to it. If it's going to come back and retest these highs, you've got 4 or 5x worth of projected profits, and maybe beyond that, right? I mean, it could go higher, but anyway, as always, just make sure you do some additional digging and research on some of these coins just to make sure you know what you're getting into. All right, Link. Let's take a look at this one. Link at $7. Let's go Link USD. That's not right. Should be higher than that. We're at $16.38. This is another one that, to me, with a falling wedge, could be a pretty good move. So if we're holding equal lows and we start working our way back to where this whole thing started, $36, which from current price and a break of this trend line, Link could have 100+% return as well. So I mean, look, this could be very exciting. We could continue to see this broad recovery in a bit of everything, right? Money's got to go somewhere. So we talked about this week in Flex. We talked about equities on demand. Look, there are trillions of dollars out there in this global system, this monetary system that has to go somewhere, because right now it's not going into bonds. Like the traditional 60-40 equities bonds portfolio is silly. Yes, bonds is there to shield you and protect you, but you're essentially compounding losses versus this type of inflation that we're facing around the world. Speaking of, I shared this week. If you're wanting to track some of the current inflation levels, global inflation data, just to see where everybody's at. I mean, look, this is a ton of countries, and probably more countries than we ever pay attention to. But you want to see some of the major ones. You want to go to, like the G20. Let's look at G20 countries. Look at some of these numbers. I mean, if you look at let's look at the highest. Okay, crisis is going on right now in Turkey, in Argentina, right? Turkey, we saw a big run against the Turkish lira. I wouldn't be surprised if Turkey goes full on adoption to crypto at some point, or their citizens are trying to take it on because they have a super unstable economy, and it's you're talking $20, $30 loaves of bread. And, I mean, it's ridiculous, right? Like that's the inflation that scares everybody. It's happening in certain parts of the world. Russia, Ukraine. I mean, honestly, Russia's inflation was not this high that long ago. Now it is. United States, we're talking about this really sticky inflation where people feel it. You feel it at the pump. You feel it heating your house. You feel it with commodities. You feel it with, I mean, the supply chain, right? And this is what the Fed is trying to tackle. Inflation in the US has been, elevated, but we've also had growth to go with it. Now we have inflation that is outpacing growth. And that is where you're talking about stagflation, which is a terrible environment to be in. And honestly, not a lot of traders over the last 20 years have ever dealt with it. So we could be facing a lot of environments that are tricky and difficult to trade. And I'm one of them. I mean, I've traded for 20 years. I've never traded stagflation. I wasn't born in the 70s. And I think that things are a lot more sophisticated now. I think that we have tools at our disposal and resources as retail traders like we've never had before. So it's great. It's a great time to be a trader. But we could also face environments that you've never faced before, and I still think that risk management is the most important thing. In order to make money, you got to stop losing money. In order to make money, you got to survive and make sure you can still trade. You know, so it really is risk management on everything. But we have some sticky inflation in the U.S. and in Europe. You can see here in Spain, Netherlands, UK, okay, Euro area, 5.9. That's still pretty high. Canada elevated at 5.7. I mean, it really is definitely higher than what has traditionally been, tolerated. Inflation is always this kind of hidden tax, 2-3%. Nobody really pays attention to it because like, oh, things are fine. But 7, 8, 9%, 3x inflation, 4x inflation for what we're traditionally used to makes a big difference. So anyway, something I'm just going to track. That's all. Okay. Good. Yes. Just heard Canada announce it will increase oil production to offset Russian supply shortage. So increase oil production. Okay. So speaking of, let's look at oil really quickly. And we'll start wrapping up here in a couple of minutes. Oil. So we had mentioned on Monday, if you came to the session on Monday with me, we had mentioned that this week in oil might be a volatility decision. So we have our high, we have our low, and it seems like right now oil is fairly contained. I don't think this move is done. I'm just trying to figure out what's next, right? I want to be like Wayne Gretzky and go to where the puck is. So if oil is going to be up here, I want to try to build around that and anticipate that. If oil's coming here, I'm going to try to get ready for that too, right? So, this is probably a good thing to kind of put the brakes and pump the brakes on energy and commodities for just a second. But the Russia-Ukraine crisis prevails, and sanctions are still going on, or the extent of them or the severity of them is still going on. So oil's still not done. And I'm not sure what oil wants to do. I think that from a price standpoint, everybody would love to see oil go down, but that's going to take really a global effort to just increase supply. Um, and I don't know. I don't know what happens with if you cut off Russian imports. That hasn't happened. That's been the big threat to the eurozone, right? Is they're not going to stop importing Russian oil, and we're not doing it in the U.S. either. So that again, that could change this, but I'm watching oil very closely because I think this translates into the commodities in general. I'm surprised that the dollar index really hasn't made a move post FOMC. It's been really quiet, but we're continuing to watch. There's nothing that convinces me that this is going down yet. If anything, I feel like this is still just staying resilient, and the dollar maybe just remains bid. As long as this past resistance holds support and the dollar just starts to creep higher, I think that pre-summer push could be pushing higher in the dollar or giving it back. I don't know yet, right? And as we said, going into next week's trading, end of the month, end of the quarter, we're going to see if we have some tops and bottoms forming. I'm certainly interested to see some of that play out in some of these currencies, Japanese yen especially. Okay. All right. Let's take a look at gold and silver. Gold is at 1946 off the 2070 highs. Silver is at 25.33. I still like silver. I talked about this a lot yesterday. This might be my wishful thinking swan song trade where this thing gets up to $29, $30 and maybe makes a break for it, runs into open space to 45. If I could hold my shares to silver, I'll be really happy. But I'm at least on silver, I'm at least going to hold it to, $29 to $30 before I start looking at protecting. So I'm in essentially GLD, I'm in SLV. I'm looking at both of those to revisit some of these highs, but silver I am way more bullish on as far as the technicals because it's not historical highs. Silver has been to $45, $50 before. Silver has had a really nice run to the upside. And I think we just range trade it right now from the low 20s into 30 bucks. I just had a chart alarm go off on CTRA. That's a stock that we are in. 27.78. Holy shnikes. We might freaking lose the stock at the highs. We might have to roll this call. Not a problem. Let's let the stock price get up there to 29, 30 bucks. This is great. Our break even, I'll use this as an example, then we'll start wrapping things up. So I'm going to go to CTRA, and we took some ownership here. I think we did at least. So we own the shares at $27, but we've drilled the cost down over the last month or so. I own CTRA at $22, and the current price is $27.90. So currently up about $5 and change per share, and potentially going to lose it at the highs around 28 bucks. Now, I'd like to see, so we're at 27.89. If we get above $28, that means I lose it. I'd get my $6 profit there per share. And this was nothing more than you start out with a little credit spread, you take some ownership, and then you repair this thing to the highs, and you flip this thing for $5, $6, $7 a share. And we've done this several times this year. We're going to keep doing this in some of these energy stocks. And honestly, like I might roll the call to the point where if we look left on this chart, this might be a stock that we might want to just hang on to for a while. So having this discussion on oil, noticing it's not really moving anywhere, I still see some energy stocks that are absolutely crushing it with room to the upside. I mean, CTRA can get up to these highs at 40 bucks. From day one of 2022, we talked about this transition into value this year. And that value is being played out by energy and commodities right now. That is the hottest sector I can trade. I mean, if we want to go to one last thing for today, just tracking the sectors, what's been the best performing sector year to date? It's probably not even close. Energy. Not even flipping close. Look at that. Year to date, 38.85% on the energy sector compared to everything else is flat to negative. Communications down, real estate down, technology down. Now, granted, these are one instrument. You're going to find some stocks in here that aren't as bad or beat up, but just from a sector alone, anything that is energy oriented, commodity oriented is performing very well. These are the stocks that are making 52-week highs. Very, very few other ones are. So this is what we've been trading this year. Okay. Let's see. For Forex, that works like level 3 does with stocks. What do you mean by level 3 there, Daniel? Level 3 like what? Like support level 3, resistance level 3, something like that? Pit boss, I haven't heard of that. Let's see. I don't believe there's a shortage of oil. It's just greed in the. There's a lot of stuff going on. Oil is always like a very manipulated commodity, in my opinion. OPEC jawbones it a lot. There's always this. There's always news flows and fundamentals of supply and demand. And honestly, oil is a pretty straightforward technical instrument to trade. But we see times like this where it's like, oh, all this uncertainty because you have a conflict, and then oil could do whatever it wants. Like make it seem like nobody in the world is getting oil and prices are twice as high as they were. And they were literally negative 2 years ago, right? Like people were paying you to take oil 2 years ago when we had a crash in 2020. And here we are, and like oil's going up to what? 160 a barrel, 200 a barrel. It's like so dumb. Anyway. All right. Hey, happy Friday. Oh, I see what you're saying. Let's see. System for Forex that works like level 3. I don't know. I mean, we can talk about that more in class. I haven't heard about that. Trading level 3, I don't know. Is that a broker thing? Like trading permission level 3? Anyway, we'll talk more about it. All right, traders, I'm going to let you go. I'm going to take a little break, get some coffee before class at 10. Equities on Demand student, see in a little bit. Flex traders, stay the course. I'll see you next week. Everyone here in the YouTube channel and watch me on Facebook, stream, Twitch, whatever. See you next week, Monday and Friday, 9 a.m. per usual. I would appreciate it for everyone watching. Click that thumbs up button for me, help the algorithm, support the channel, and appreciate the chat and the ongoing conversation and engagement. Have a great Friday. Have a great weekend. Good luck with those brackets because I think they got busted last night. Mine did. Gonzaga losing. All right, I'm done. And then Arizona losing. Everyone else is done. I think I do have Kansas in the final, so that's my last straw. Like I might win a bracket based on who's in the final as one part of it, but I think Kansas is the only remaining 1 seed, and they play tonight. So ugly stuff, but congrats all the underdogs. That's what a retail trader is, right? We're just underdogs. All right, cool. Thanks everybody. Appreciate it. Again, click that thumbs up button for me. I think that does help a lot, helps a ton. And I'll see you next week, Monday and Friday for the YouTube page and class. Same time, same place as always. All right, thanks everybody. Bye.